Welcome to Tikona Capital FinServe's Market Outlook for November 2024. I'm excited to share our comprehensive analysis of the recent market correction, the emerging signs of recovery, and the strategic opportunities we see ahead. At Tikona Capital FinServe Private Limited, your investing co-pilot, we provide comprehensive wealth solutions for working professionals, HNI clients, and family offices. Our philosophy centers on creating finite solutions in an environment of infinite financial possibilities. Important disclosure: investments in securities are subject to market risks. Please read all documents carefully before investing. This presentation should not be considered as investment advice. Please consult your financial advisor before making investment decisions. Past performance does not guarantee future results. For information and detailed disclosures, visit our website at tikonacapital.com. A Trump presidency presents both challenges and opportunities for India. The IT sector may face headwinds from stricter H-1B visa policies and reduced outsourcing. However, manufacturing could benefit as US companies diversify supply chains away from China. The auto sector may see shifting investment patterns, with potential gains from global supply chain realignment. Pharma may experience mixed outcomes with potential benefits from US demand for affordable generics. Defense collaboration could strengthen amid shared China concerns, though America First policies might affect imports. Energy markets may see volatility due to Trump's pro-fossil fuel policies, impacting India's import strategy and renewable goals. While timing is unpredictable, history shows that corrections like those in 1992, 2000, 2008, and 2020 are part of market cycles. Each crisis was followed by recovery, reinforcing the importance of staying invested through volatility with a long-term perspective. The 1992 scam exposed by Harshad Mehta involved exploiting banking loopholes, creating a stock market bubble that eventually crashed. This led to strengthened regulations and SEBI's empowerment, creating a more transparent market system. The dot-com bubble burst impacted Indian tech stocks significantly, but it also paved the way for a more resilient IT sector, with companies adapting and contributing to India's future IT growth. The 2008 crisis caused a 50% market plunge, GDP slowdown, and liquidity crunch. However, RBI rate cuts and government stimulus packages helped the economy recover by 2009, demonstrating effective policy response. The pandemic caused a 30% market crash, 24.4% GDP contraction, and massive job losses. Government stimulus and RBI measures helped stabilize the economy, leading to a strong recovery. Now let's examine current market performance and the opportunities emerging from recent corrections and global developments. Trump's tax proposals include extending TCJA provisions, cutting corporate taxes to 15%, and eliminating taxes on tips. However, economists warn that tariffs and deportation policies could drive inflation higher by acting as consumer taxes and tightening labor markets. U.S. economy showed strength with 233,000 jobs added in October, the highest since July 2023, signaling robust labor market conditions despite global uncertainties. India maintains the highest policy rates among major economies, while the US and Eurozone show moderate inflation. Japan continues with near zero rates, indicating diverse monetary approaches across economies. Positive yield curve spread indicates reduced recession risk. Inflation is trending downward toward the Fed's 2% target, while unemployment remains stable, supporting hopes for economic recovery. China faces 60% tariff threats, forcing a shift to high-quality development through advanced manufacturing. With global resistance to Chinese imports, the country risks stagnation unless domestic consumption increases. Beijing's stimulus package boosted Chinese stocks to 2008 highs, attracting foreign and retail investors. However, sustainable revival depends on structural reforms beyond short-term measures. Trump's support for U.S. oil producers may keep petroleum prices subdued, benefiting oil importing economies like India through lower import costs. Indian economy. India's young population, digital transformation, and entrepreneurial energy create a powerful demographic dividend poised to drive sustainable economic growth. India is expected to grow at 6.5% annually until FY29, reflecting strong medium-term prospects despite global challenges. October showed robust activity with 9% YoY GST growth and manufacturing PMI at 57.5, one of the fastest expansions in nearly 20 years, signaling strong economic momentum. High capacity utilization and continued public capex are fueling business optimism, setting the stage for private investment revival and sustained growth. Production-linked incentives worth 2.7 trillion rupees across 14 sectors, including semiconductors, are accelerating India's manufacturing ambitions and global competitiveness. India has created over 100 unicorns, most in the last 5 years, demonstrating a vibrant innovation ecosystem driving economic diversification. Manufacturing is crucial for escaping the middle-income trap. Unlike resource-rich nations that stalled, manufacturing-driven economies like South Korea show the path India must follow for sustained growth. India's export share is set to double to 3.5% by 2031, with engineering and electronics leading growth, proving the manufacturing strategy's effectiveness. India is systematically addressing infrastructure and regulatory bottlenecks to become a credible global supply chain alternative amid shifting global trade patterns. Markets in October 2024. All major indices ended negative in October, though SME/IPOS showed relative resilience during broad-based market weakness. PSU banks, CPSES, and pharma outperformed during the market fall, reflecting defensive positioning by investors amid uncertainty. Most global markets declined except Japan's Nikkei and Nasdaq, which held up due to local factors and tech sector optimism. FIIs recorded their highest selling since March 2020 due to geopolitical tensions and global risk-off sentiment, impacting market flows. October saw mega IPOs like Hyundai and Waaree Energies, reflecting strong primary market activity despite secondary market challenges. October saw broad declines across strategies, though Nifty Midcap 150 momentum outperformed year-to-date, showing relative strength. Over half of mutual fund investors have joined in the last 3 years, with sectoral, thematic funds seeing the sharpest folio growth in 2024. Pharma funds were least affected during the crash, while international thematic funds performed relatively better than domestic themes. Credit risk funds outperformed in debt category, while hybrid funds with silver and gold exposures showed strong performance. Opportunities or market outlook. Corporate profits as percentage of GDP hit a 15-year high in 2024, providing strong fundamental support for equity markets. Market capitalization to GDP ratio remains above long-term average, reflecting built-in optimism about India's growth story. Rising profits and declining debt have strengthened corporate balance sheets, enabling future investment and growth capacity. Tax filers grew at 4.4% CAGR over 5 years, indicating broadening formalization and a stronger tax base for economic stability. Equities share in household assets grew 2.6x in a decade, yet remains low versus global peers, signaling ample room for further growth. Housing sales expected to grow at 10% with low inventory levels supporting a sustained residential cycle across major cities. RBI's forex reserves approaching $700 billion provide a strong buffer against global volatility and support currency stability. Rate cuts likely in India by Q4 CY24, following the Fed, which should support growth and equity market performance. Strong earnings growth across sectors makes India attractive, with several industries expected to deliver 10-20% APES growth. Nifty earnings estimates are outperforming historical trends, supporting market valuations and future performance expectations. Nifty trades near long-term average PE, while mid and small caps command premiums, requiring selective investment approach. Q2 results show moderate growth with average PAT growth at 3.6% for 694 companies, reflecting near-term earnings pressure. 6 mega themes will drive wealth creation: globalization, consumerism, formalization, clean energy, financialization, and technology, representing structural shifts defining India's next growth phase. Corporate earnings expected to improve as macro conditions stabilize, supporting market performance and investor confidence. While corrections are normal, India's macro fundamentals remain strong. Improving global growth, softening rates, and domestic resilience support positive outlook. Financials, specialty chemicals, and it offer better risk-reward. Key risks include geopolitics, election outcomes, and food inflation. Bottom-up stock selection is essential in current market conditions. Nifty 250 reflects our long-term conviction in India's potential. Risk mitigation through diversification and quality investing is crucial for capturing sustainable growth. At Tikona Capital Finserve Private Limited, we believe in creating finite solutions in infinite possibilities. Our triangle logo represents filtering out unknowable edges from the ultimate circle of market uncertainty. Founded and led by Sumit Poddar, our team is committed to empowering customers to invest in high-quality businesses and build long-term wealth. Connect with us at tikonacapital.com, follow us on LinkedIn, YouTube, and Twitter. Thank you for watching, and remember, invest with conviction, build long-term wealth.